Hi, everyone. Welcome to your latest Carson's Take 5. Ryan and Sonu here. Sonu, a couple weeks ago, we talked about our stocks in a bubble, and we pushed back against that. But lately, it feels like every time I turn around, we're hearing the question, is AI in a bubble? And we're going to talk about that. I'm going to go to you in 1 second here, Sonu. I saw the Mag 7, like the big 7 names, tech names, almost $21 trillion combined market cap.
By the way, the U.S. economy is $28 trillion.
That's a lot, and listen, there is earnings and there's this and that. We're going to get into all of it. The NASDAQ's had an incredible run. Technology's had an incredible run. No, we don't think it's a bubble per se.
Wait. I think there's a bubble somewhere. There's a bubble in articles about the AI bubble.
Well, I was going to joke, if you do a Google search, they have that Google Trends, and you type in AI bubble. Yeah, that's a bubble. That's exploded. You've done some very interesting work on this because, again, this is what stuff we're hearing every day. You turn on CNBC, there's going to be somebody telling you AI is in a bubble. Honestly, been hearing for about 2 years now. I've been being told AI is in a bubble, and well, they keep going up. So let's put it there. But Sonu, give me your views on this very important question.
Look, I think it's beside the point. The question is, okay, even if it is a bubble, no, we don't think it is, but I think that question is sort of, I hate to say irrelevant, but I do think it's irrelevant. Like, what are you going to do even if it's a bubble? Are you going to go short these names? No, nobody in the right mind is going to do that, right? So then I feel like you need to understand what's happening. And there is something massive happening in the economy. And specifically, when we think AI, it's like, oh, how is it going to change our lives? And I think that's much further down the road. I am biased to thinking that it will have a big impact on our daily lives, just like PCs and iPhones and the internet did, right? But that's like maybe 6, 7, 8, 9 years away.
Okay.
Well, what's happening now is investment spending on AI-related hardware and software. And that's actually showing up. It didn't show up in 2023 in the macroeconomic data and GDP. It didn't show up in 2024, but it's showing up right now in a big way, right? So information processing equipment spending, when businesses spend, it's called investment. Over the first half of the year, it rose at a 35% annualized pace. Spending on software, investment in software, I should say, 23% annualized, Ryan. And if you look at how much these two categories contributed to real GDP growth in the first half, it was an average of 1.1 percentage points. That's as much as consumption, which makes up 70% of the economy contributed, right? This stuff makes up about 6% of the economy. It's actually larger than it was back in 98, 99, 2000, just as how large of a part of the economy it is. So yes, it is having a massive impact.
So spending is considered an investment. I was thinking like
if businesses do it. If businesses buy a computer, it's considered an investment.
I think like with my family, we invest a lot. Because we spend a lot, it feels like every time I turn around. Anyway, it's late when we're doing this one, everybody. So the truth again is there's pockets of the market that are frothy. I mean, I turn around and I look and there's all these IPOs that are pretty successful. There's all these different deals. OpenAI with Oracle, OpenAI with AMD. We have Meta with Google, Alphabet. I mean, there's more. It's like every day you turn around and these are some huge numbers. Hopefully you remember it. What's the guy who said I'd rather go bankrupt than lose? Or I said it wrong, but who said that one?
Larry Page, the founder of Google / Alphabet. I'm willing to go bankrupt rather than lose this race. Yeah. So you have all these companies.
That's the attitude, everybody. That's the attitude. Yeah.
Right. Like, do you want to bet against that? Like, I'm just joking here. This is not a recommendation, nothing of the sort, right? Like, imagine how long it would take Google to go bankrupt, right? Even if that was the goal, it's obviously not going to not the goal, but it would take years, right?
Yeah.
But all these companies are in this dynamic of it's an arms race. They have to participate, right, in the spending. I just saw a video with Sam Altman, the head of OpenAI, saying, we're going to be really aggressive with investments. So there you have it, folks. Yeah. I mean, OpenAI is in the center of it, right? I mean, like you said, it's forming partnerships with all these chip companies, NVIDIA, Intel, AMD, and then it's collaborating with what we call, quote unquote, the hyperscalers, right? They provide these large scale cloud compute capacity, Microsoft, Oracle, Amazon, Google. And then what happens is they found the partnerships. What do these other folks get? They get a customer, a really large customer, right? They get new orders, they get AI workloads. and they see cloud demand from these AI workloads because all of us are like, oh, make a nice new video of, a bull and a bear having fun or something like that.
Yeah.
Right? And then the stock prices of all these companies go up. OpenAI's valuation also rises. And then OpenAI says, hey, look, we are worth $500 billion now. We're no longer worth $100 billion. So why didn't you give us more money? Right? Because we can do more infrastructure spending. And that's the wheel that just keeps on turning.
Wow.
And I think the stock market is a key piece here. As the stock market goes up, valuations go up. OpenAI's valuation goes up. Funding becomes, quote unquote, easier for them. They invest more. But from an aggregate perspective, investment spending leads to profits.
Yeah, no, well said there. You mentioned the word bankruptcy. Reminds me of the very famous Hemingway quote, how does one go bankrupt? Very slowly, then very suddenly. I always like that quote there. We'll probably wrap this up soon here. The truth again is, where's the growth coming from? It's earnings season. We'll talk more in these videos over the coming weeks about earnings season, I'm sure. Once again, it's expected that technology, communication services, large cap tech, AI, that area is where the majority of the big, fast growth is going to come from. This time 3 months ago, I think I'm close enough for government work on this. Technology earnings are supposed to be up like 16, 17%. Sonu, they came in up 25% year over year. We've been seeing this quarter after quarter, right? History doesn't repeat itself. It often rhymes. Mark Twain used that one a lot. Wouldn't be shocked at all if, let's say, 6-7 weeks from now, when earnings season's kind of winding down.
What do you say? Death, taxes, and NVIDIA earnings?
Yeah, I joke with the media every time NVIDIA has earnings. I said, what are the things you can always, bank on, so to speak? Death, taxes, and NVIDIA beats on earnings. It's been that way for 3 years now, really. But the reality, again, is if you're investing in a portfolio, you probably need some technology in there. We're slightly overweight large cap technology. We're not wildly overweight, and we see the potential risks. There's a lot of excitement. There are some frothy areas out there. But again, I think you've said ride the wave, right? If you're riding the wave, eventually it will crash, and it might be spectacular when it happens. But then again, that wave would go a lot longer, and we're not saying we're in a late 90s scenario, but the late 90s scenario went over many, many years, right? This all kicked off November 22. That's when ChatGPT came out. So again, is it in the second inning, the third inning? Our friend Dan Ives, a lot smarter than you and I, and a lot of people. He still says we're third, fourth inning. He says it's 5 o'clock in the morning party. It's 2 o'clock in the morning. So there's still time, from that point of view. Last comment, Sonu, I'll go to you. It wasn't that long ago, in February and March and April, really, a lot of these stocks were down 30, 40%. NVIDIA was down 40% this year. People forget that, right? So there could be another one of those banana peel moments at any moment, to be honest, in these companies. And you have to ask yourself, am I going to panic if that happens? Or is there going to be an opportunity because we still think there's time? So just be aware, they are super volatile. Sonu, last words of wisdom from you to wrap this up.
Now, usually when you're worried about, what happens, if this, wheel stops turning, right? What's the impact of that? And then the next thing I usually look at is there a lot of debt out there? How are they financing these things? They're just about starting to use debt, right? And it's massive. Don't get me wrong. For example, Meta just got $26 billion in financing from its lenders, private credit, things like that.
Wow.
They're funding a construction of this massive data center in Louisiana, which is the size of Manhattan. Think of that. It's the size of Manhattan. Okay. That's how big this is. And this is just the first one. There's one.
We're going to make a lot of those glasses in there, huh? Those Ray-Ban glasses.
So they're just starting to use debt. For now, look, these are cash-rich companies, right? They sell ads. I mean, every time you look at the internet, you see the ads. You look at YouTube, you see ads. They sell cloud computing services, companies like Microsoft and Amazon. So they are cash-rich, but they're starting to use debt as well. I think it's fairly early as well. But it goes back to the question, so what if it's a bubble? What are you going to do about it? We're trying to understand what is actually happening on the ground. What is the impact? Where could the pitfalls be? And one part of coming back to the portfolios, I'll end with this. This is why you want to be diversified, folks.
Yep.
You don't want to bet everything into one single part of the market or one single part of the economy, right? That's why we have all our diversifiers. We have treasuries, we have some gold, we have managed futures, all of this stuff, right? And I think, look, the party could go on for a while, and you have to figure out, okay, how do you ride the wave and how do you protect yourself?
No, well said. And those are things that we're going to continue to talk about every single week in these Carson Take 5 videos. So with that, everybody, is AI in a bubble? Maybe that's not the question we should be asking, is the short answer. So thank you for joining us. We'll be back next week. Take care, everyone. Goodbye.